Viewers, the rupee has been sliding for the last few days, and earlier this week on Wednesday, it hit a record low of 79 against the US dollar. This has sparked a debate among analysts about whether the domestic currency could see slides further amidst weak fundamentals. The rupee is down nearly 6% since January this year. The fall is being described as a double whammy for the common man, coinciding with the country reeling under high inflation, which is pushing up the cost of living, the prices of everyday items drastically. Union Finance Minister Nirmala Sitharaman, however, recently said that the Indian currency is relatively better placed than other global currencies against the greenback. There are, of course, statistics that are going to be reeled out by the government to explain how perhaps they're even beneficial to the Indian economy, irrespective of the pressure that will be put on the current account deficit. There will also be, of course, those who will say that the RBI will intervene sooner than later, so let's not stress too much. Let's, however, put this out for debate. Let's get the experts in, let's speak to them, and let's get a sense of why this is happening. What does it mean for us? And should this rupee be propped up? These three big questions over the next 25 minutes. Let me first begin with our panelists now and ask some of the basic questions. Gurucharan Das joins us, needs no introduction, widely read commentator, author. Mr. Das, why is the rupee falling? Let's first examine the issue.
Well, the rupee is falling because the US interest rates have gone up, and also because of the impact of the Ukraine war on the supply system in the world. But in fact, the rupee fall has been less than the fall of many countries. China has higher fall, Japan has had a higher fall, even the euro has had a higher fall in Europe. So frankly, you know, we should not think of a rupee in terms of national pride. It's, you know, I know a friend of mine who said, Pakistan has gone, rupee has gone to 200. So aren't they in a bad way? Well, actually a rupee should be competitive. That's the right thing. That in fact slightly undervalued because it helps exports. And India's priority today is jobs. It is, and jobs come, the kind of jobs that we need come through export. No country became a successful economic country without exports. And India has been a relative failure. Our exports are less than 2% of world exports, and in fact, we should unless we really think of the world as our market and join with the global supply chains, we will not create the kind of jobs that we need, and therefore, it is very important, much more important, to build on export success, and it's not just a fault of this government, it's been a fault right throughout for the last 70 years. And but the rising cost of imports as a result of this, as a result of a weak rupee, does mean inflation, and we have to balance that. So there is a downside, and the fact of the matter is that 80% of our crude oil is imported, and that directly impacts on inflation in a major way. So on a short term, I mean, how long the oil will keep up, one doesn't know. In the short term, yes, but over the long term, India should never think of itself, should never worry
Okay.
about rupee and making it a matter of national pride.
Okay.
Of course, the Gujarat elections are coming, and the opposition is going to tell the government, "Oh, look what you did," but the government should explain, should make the ordinary voter economically literate, that an undervalued rupee is better than an overvalued rupee.
Okay. Let's
And
bring in.
hence, I would say that we should not worry.
Don't worry.
RBI should not intervene.
Okay.
Let it slide. It's already a bit. It's overvalued. Let it slide a bit.
Okay, it's not a sign of virility. Basically, delink it from that. Okay, let me bring in Santosh Mehrotra, senior economist. Mr. Mehrotra, what's the trigger?
The trigger we know, the Federal Reserve of the United States has raised rates, and there's a flight to safe haven. So that's an immediate trigger. But there are two foundational reasons why this is happening, and the foundational reason is what should worry us. The first foundational reason is that we already had a differential in the inflation rates prevailing in our country versus our competitors, and of course and Europe and North America, and our government has not helped in that regard. And the other foundational reason, which unfortunately has not so far been mentioned, is that our trade-weighted real effective exchange rate, which was very competitive for a 20-year period preceding 2013-14, and I'm looking at numbers as I speak on the real effective exchange rate from the Government of India's economic survey, and the real effective exchange rate was flat. In other words, our exports were competitive, and our exports were growing at over 15% per annum every year for over 20 years. And after 2014, what has happened is that our exchange rate has appreciated, as Mr. Das was rightly pointing out. It has appreciated by a good 15%. I have the numbers on that also from the economic survey. And that's a very important reason why our exports did not grow. Why is China such a powerful country in the world? Because of its exports. Its export to GDP ratio is, was higher than ours. We had climbed up to the same level by 2009, and we have slumped since then. Absolute merchandise exports fell from the dollar value of $318 billion in 13-14 every year for the next 6 years, and they have continued to be below that level until recently, when they have risen. So the point is, there were policy mistakes, and those it's unfortunate that the rupee is falling so rapidly, because in an economy which is already suffering the throes of very serious inflation, which is also partly policy induced, we are now importing even further inflation. Yet at the same time, I agree entirely with Mr. Das that the depreciation that is happening is required. It's a timely correction. Our exports had begun to grow in the last 1 year or so, and they need to maintain their upward swing, because if they don't, then our joblessness is very high as it is. So Mr. Das was right in regard to how important merchandise exports are, particularly for our job creation.
Okay, let me bring in Ajit Pai. Ajit Pai, more fundamental reasons, two more, Santosh Mehrotra points out. Fundamentally, there are problems. That's why we're seeing this. Yes, there are some pressure points with rising crude prices globally, a strong dollar overseas, and persistent foreign capital outflows, but there have been policy mistakes.
So I didn't get what the specific question is, but I would agree with the two panelists that have already spoken about the two primary drivers what the rupee's depreciation is. One, of course, is central banks around the world, particularly in the United States, the US Federal Reserve, raising their interest rates. There's a little bit more of that left. So, expect that factor to continue to impact things. And then second, the price of fuel or fossil fuels that have been exacerbated by the Russia-Ukraine war. And with India importing 80% of its fossil fuel consumption, impacting things from an export and import perspective. So those two are the single biggest factors, and I think all of us would agree that at least the former is likely to see another additional increases in terms of interest rates in the US. But also, as the panelists have pointed out, there are two other factors, which is that they talked about global inflation being imported in. I'm not as much of a pessimist over there as some of the others are. If you have a look at inflation today, globally, it is extremely high. And if you have a look at India's relative inflation, it is more reasonable right now. And the government in India has taken actions to ensure that inflation remains within a certain band. Globally, you're looking at, in Europe, inflation at 35 to 40-year highs. You look at Germany, you look at Spain, you look at Italy. If you're having a look at inflation in the United States, you're looking at 40-year highs, even perhaps higher than that. So since the early 80s or late 70s, they have not seen inflation like this. And in India itself, a lot of the work that we have done, I think, has tempered things as far as inflation goes. Yes, it's high. Inflation in India is high, but relative to what the expectations of RBI are, but it's not as high on a relative basis as what the rest of the world is experiencing. Definitely not even 2-decade highs when the rest of the world is significantly higher. So I would say that the current decline in the rupee, there's a little bit more of that. Similar factors as the taper tantrum. I think some of the exacerbation that we have seen in fossil fuels and the volatility over there from an inter-country international perspective and the sort of repolarization of the world is impacting things over there. But even that, I think, on a year-on-year basis, should start evening out, and you should start seeing, some stabilization from those factors. On the export front, my slight sort of variation with the other panelists would be exchange rate sort of differentials are not necessarily, very sustainable in the long run. It is competitiveness of an economy that really matters. India has made huge strides in the past 5 years in terms of making the, an infrastructure, massive investments there. Making our overall economy far more competitive. I think the RBI should step in to reduce volatility as they have, but not necessarily control the direction of the rupee. And RBI has been very disciplined about doing that. You have seen a little bit of a fall in our foreign exchange reserves as they stabilize things, because in a period of very high volatility, there is uncertainty that businesses face. But nothing new in setting new records for the price of the exchange rate, because we've been setting new records for the past 30 or 40 years. It's the pace of the rupee's decline that is still fairly moderate relative to past periods. And I would say that we can expect a little bit more of that, but the RBI to sort of step in to stabilize things.
We'll come to the RBI bit. We'll come to the RBI bit and how much should they actually intervene. But I want to pick up from where Gurucharan Das ended by saying that, look, there's another election that's looming, the Gujarat election. Of course, there is constant frisson between the government and the opposition. You're going to have the monsoon session begin, and I'm sure this issue will come up. So, Santosh Mehrotra, let me ask you this, because the Congress and other opposition parties are saying that before Modi took office, the rupee was at around 58 to a dollar, and today it's above 78. So this shows that there has been gross mismanagement. Do you agree with the opposition's charge in its entirety, or do you believe that this is a bit of grandstanding and they're being a bit alarmist for obvious reasons?
As an economist, I don't look at the absolute value of the fall in the rupee. I would much rather look at what I said earlier, which is the real effective exchange rate. That's what determines our competitiveness. And the fact of the matter is that we have been patting ourselves on the back because we were getting increasing amounts of foreign direct investment. At the same time that private investment had stagnated. In fact, it has systematically fallen as a share of GDP. This government had inherited 31% of GDP. It now stands at 26%. Even before COVID, it was at 28%. So, just because FDI was coming in, we were congratulating ourselves. Foreign institutional investment was coming into our capital markets, and we were congratulating ourselves. And that was one reason. These are two reasons why our rupee was strengthening, was relatively strong. And now that it is depreciating, of course, the Swadeshi Jagran Manch and such organizations will make a noise about this fact, not recognizing why this was happening, why the rupee was supposedly strong in the first place. And the important point is that the amount of dollars that have flown out from our capital market in the last 8 to 12 months actually is slightly larger than the full total amount that flowed in from 2009 to 2020. So we should keep these facts in mind. The bottom line is the RBI now has rather little choice but to intervene, because there has been a dramatic fall in recent weeks, as Mr. Pai rightly noted, and that's what's damaging. So while correction of the exchange rate was necessary, as Mr. Das was saying, and as I've been saying, but it's the rapidity of the depreciation in the rupee that's happening, which is a shock to the economy. Already the economy is suffering from one shock after another. We might sort of pat ourselves on the back on our inflation rate being actually better than some countries. Yes, it's better than Russia, which is going through a war at 16%. But the fact of the matter is that our government could have controlled inflation by reducing diesel prices, because diesel is an input into other products. And so it has failed to do that. And because it has failed to do that, unfortunately, our inflation rate has remained very high. And our food inflation, I want to remind you, in a situation where our unemployment was shooting up, aggregate demand was collapsing over the last 2 years, and the advanced estimates, second advanced estimates for FY22 for GDP is telling us that per capita consumption is still below 2 years ago. And in that situation, if you are allowing inflation to rise, and it's policy-induced inflation, then this is, unacceptable. It is unacceptable, and a correction is needed. Because now, as Mr. Pai rightly noted, there is a risk and a fear that this war is not ending soon. Crude oil prices have spiked, and this government is not protecting the poor, unfortunately, which is unlike what was happening when crude oil prices under the previous government in the last 2 years were very high, same level as today, and they lasted for 2 years. But the government protected the poor.
Okay. Let me bring in Gurucharan Das now. Mr. Das, you've heard you've heard Mr. Mehrotra. How do you respond to him? Because it's all about balancing, isn't it? And many people are sort of projecting the rupee to cross even 81 rupees per dollar. It's also pertinent to mention that as per a recent financial stability report by the RBI, 44% of the private sector's external commercial borrowings, or ECBs, are unhedged from currency fluctuations. That could have a massive impact. As we know, jobs are hard to come by, costs of living spiraling.
Well, I think that really you're right. It is a balancing act. You have inflation is determined, one of the factors determining our inflation is the global inflation. And the fact of the matter is, the short term, there is a pain that is caused by inflation. So you have to really balance the short and the long term. Long term, dignity to a human being comes through a good, solid job, not a MGNREGA job, not a pakora vala job. It is a decent job. And that is what Mr. Modi also promised when he talked about Vikas in the 2014 election. So that is the priority of our country long term. And so I would just say that, look, we don't need to panic. The Reserve Bank, I mean, $600 billion, we've never had that kind of reserve. And so there is no real worry of the kind that exists in many, many countries, including Pakistan, Sri Lanka, and others. We are well placed. Secondly, the last year's record particularly, which was a banner year for exports, shows that we can return back to those fine years when exports were growing at a decent level before 2009. So I would just say that, let's always bear in mind that the war will be over one day. I mean, it'll hopefully sooner rather than later. And the inflation will come down, the price of oil will come down, and we'll return to some degree of normality.
What in the interim does it mean for the citizen, Mr. Pai? What in the interim means, what does all this mean for the citizen? How is it going to impact my bottom line?
So so when we have a look at the what it means for the citizen, we are looking at sort of very high global uncertainty. We're also looking at very high global inflation. I think one of the things that all of us must recognize, and I think was pointed out right in the opening remarks of Gurucharan, was the fact that this inflation bout is actually supply linked, not to do with excessive demand. Now, while world central banks are reacting to it because the inflation has been persistent for a pretty reasonable period of time, as they're stepping in to sort of ensure that they actually try and cool down demand to cool this inflation, it's going to take a lot more to do that than just raising interest rates, because sometimes the shortages in supply are far more extreme. And the war exacerbates that. It's impacted supplies of food. You know that the Russia and Ukraine are actually 30% of the world's cereal exports. It's impacted oil. It's impacted a lot of the other things when you're looking at the global shipping, when you've looked at what's happened with China and the impact on China of shipping. So a lot of these supply constraints are impacting things in the world. So one of the things that I think that the Indian government has tried to do when they talk about Atmanirbhar is not sort of reducing trade, but looking at improved self-reliance. So looking at within the country to be more dependent, sort of within the country for what we can do to keep employment up. The huge focus on infrastructure where, not only does it make the economy far more competitive, but also any money that is spent on infrastructure or now increasingly on urbanization has 5 to 6 times the employment elasticity of other sectors. So what we are seeing is that there's a pretty significant thrust on domestic factors when the world is an uncertain place and geopolitically things are realigning. And I also think that the attention that on inflation that we have, the approach of making it, giving up, we did give up some prices on fuel. There were cuts on excise duty actually, despite it being sort of, raw material linked rather than anything else. And this is a way of just moderating in the short run inflation. But those global factors we have to control by improving our own productivity to control things. And it's not demand driven. So I think for people in India, they can look for relative stability relative to the rest of the world. I think the world is going to see a far more volatile place than India will. I think a great tool that India has as a government is our private credit is still very low. That's a tool that's been used up in most of the OECD. That our balance sheet is extremely strong when you're looking at the RBI. So low private credit, huge reserves at the RBI, gives both the RBI and the Government of India several policy tools to ensure that the volatility that India will see is going to be much less than any of the other large global economies. So I'm more optimistic about the Indian economy today and relative stability of the Indian economy. Much more positive right now about exports with all the volatility in the world and all the investments that have been made, but just showing up in the numbers right now.
Okay.
So I think our Indian citizens are going to be much happier than otherwise.
Okay, Mr. Mehrotra, I've just got about a minute on the show. Please, go ahead.
Oh, 20 seconds.
Okay.
Firstly, let's just remember that although we've been told repeatedly about our competitiveness, well, our logistic cost is still much higher than our competitors like Vietnam, Bangladesh, and that's why they are attracting the foreign capital and we are not. And other than that, what matters at this juncture is protecting the poor, whose demand has collapsed. So obviously it's supply driven, this issue, but demand has collapsed. How can it be demand driven, the inflation? So we've got to correct for that. We've got to enable demand to rise, but that can only happen if you don't pump inflation into the economy by keeping taxes on diesel and petrol as high as they are, which is already in a high joblessness situation. You're raising inflation rates, which is going to worsen the situation both for our exchange rate as well as our poor.
Well, what's the fine balance that needs to be struck? We are back there, but a large number of people don't share the optimism that is exuding from the government. They believe that they're going to take greater hits on their savings, viewers. And they're saying this because there are a large number of reports out there which seem to suggest that A, the external environment, and B, as Mr. Mehrotra says, demand, both are a bit unpredictable in India right now. I'm leaving it at this. I'm leaving it at this, viewers. Thank you for watching.